Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. Well, we made it to the end of a very busy week on the reporting season calendar and, of course, to the much anticipated Jackson Hole Symposium, which kicked off last night at Wyoming. Last night, our time, of course, in Wyoming. It was daytime, I believe, when they were all gathering, but we're eagerly anticipating the speech of Jay Powell. Look, we had 10 wins in a row. We haven't been able to make it to 11. The market down by about 0.2%, a third of 1% on the CBO 200 as we round out the day's trade. So getting to our themes of the day, really snapping that streak. 10 wins though, you've got to like that. We did see US markets also lose ground on Thursday, pulled lower by tech shares, and of course investors very much awaiting Powell's powwow and the likelihood that we will start to see that imminent rate cut trajectory very much flagged. The question that most people are saying now is it's not a matter of the fact that we are expecting to see a cut in September, it's whether or not you'll see 25 or 50 basis points, and of course market participants are very much divided on that. And look, we're gearing up for another big week. I did bring my little cheat sheet along with all the companies that are going to be reporting next week, because we're just getting over this week, but we've got a lot ahead next week. We've got Bendigo and Adelaide Bank, Kogan, NIB on Monday. Tuesday's very busy with BHP, Coles, Johns Lyng, Lovisa, Worley. Wednesday we've got actually I think Flight Centre's later in the week, but nevertheless Flight Centre next week. Woolies coming through as well. We've got the likes of Qantas, South 32, Wesfarmers, Ramsay Health, Star Entertainment, a lot of those CEOs and CFOs speaking to ausbiz. And of course, if you've missed any of the great chats that we've had this week, you can find them all on our website, ausbiz.com.au, and click on that reporting season rail. Also some really good insights from analysts as well. Today we spoke to the likes of Jessamir from Moo. I spoke earlier in the week to Blackwattle's Michael Skinner. He says, beware the second half of reporting season. Are we going to find out where those dead bodies are buried? All right, let's have a quick look at the sectors of the day, kicking it off with the miners that have had a very volatile week as we continue to monitor movements in the iron ore contract. Today we are seeing weakness again, Fortescue down by about 2% to $18.03. Having a look as well at what we saw in the healthcare space, because we did get an upgrade from Fisher and Paykel today, which did send its shares higher. It's not on our screen there, but we might check on that in a little while. Other healthcare stocks looking okay, apart from Sonic Healthcare, which of course reported yesterday. When it comes to the retail picture, I spoke to Accent. That interview is up on our website. Really interesting in terms of what they're seeing with trends, because even though they did have to close a number of glue stores this year, they are opening 50 more stores. That's the plan for full year 25. And they're seeing that despite, of course, cost of living pressures, people are still very much spending on brands. So UGG, Hoka, Skechers, all looking really good for Accent Group. A quick look at some of the top stories. And I spoke to the Inghams CEO as well. Now, shares down 20% today. This is always when you have challenging consumer conditions written in your headline. It did have a 68% jump in 24 profit, but of course concerned about the cost of living pressures moving forward. Telix Pharmaceuticals, meanwhile, coming under pressure after it posted a profit of nearly $30 million for the first half. Fisher and Paykel, I mentioned, they're lifting its financial 2025 profit guidance. Accent there, I did speak to that footwear retailer, missing expectations with its 33% drop in net profit after tax. And the share market's hottest initial public offer this year, hitting a record high today. Investors bidding for Burritos merchant Guzman y Gomez, which hit $35 a share just before it closed below that, I should say. And the stock of the day was Telix Pharmaceuticals. We heard from Mathan Somasundaram, Deep Data Analytics, who spoke to Andrew, and also Kai Chen from MPC Markets.
I think Telix is a really good stock. If you're there, you hold on to it because they are executing. I'll say the same thing about Pro Medicus, and I'll say the same thing about Clarity. They're doing well. They're executing as they said. Yes, the market expectations tend to get a bit ahead of itself, and then it gets pulled back a bit, and then generally goes along with that. Till something goes wrong, you want to be in these stocks. But I can understand investors, it's just too hard when the stock has run so far to say, oh, look, I'll get in now. And that's just psychologically too hard. So if you're there, I'll be holding. I think new money is just too hard. If you're going to invest these kind of sectors, you want to pick them early and stay for the ride. And if you're there, hold on.
Telex is such a growth stock. The market, addressable market, is really huge on this. But given where the analysts were pricing it, basically they released their earnings yesterday. It pretty much was on the upper side of the guidance, but I think the market was just expecting a lot more. That growth potential is there, but basically if there's anything that goes wrong, the market is, the valuation for this stock is pretty high. So you are exposed to downside. We like clarity as well. But yeah, I think if you're already in it, it's definitely a stock to keep in your portfolio, but beware of the risk.
Beware of the risk indeed. All right, welcome to the COB, Shane Oliver from AMP. Shane, should we beware of where the dead bodies might be buried as well as we head into the last week of reporting season?
Well, quite possibly. There is a tendency for good companies to report early on, and then as we get to the last week, some of the not so good results start to appear and drags the averages down. So that's certainly a risk. So far, so good, though. As you can see from that chart, though, we've got slightly more beats, the light blue numbers at the top there, than misses, 36% to 32%. Out of interest, both of those are a little bit less than normal, so you're seeing a slightly higher than normal amount in between or in line. So that's good news. I guess the other aspect is that we have seen an uptick in the number of companies reporting profits up from a year ago, and also profits raising their dividends from a year ago, particularly compared to the last two reporting seasons. But we're about 2/3 of the way through, still a little bit to go, and the tendency is you do get some softer results in the final week.
Indeed. And the other, of course, big focus is on Jackson Hole, getting our cowboy boots laced up to hear from Jay Powell. Shane.
That's right. I don't know quite when I became conscious of Jackson Hole, but certainly in the last 15 years or so, it's been a big event. On occasion, Fed chairpersons have made major announcements. I think the start of QE2 was sort of flagged at Jackson Hole back in 20 from memory. So it does have this sort of reputation for announcing changes in TAC or changes in policy generally. I guess going into this one, there is a little bit of anticipation that the Fed, or Powell particularly, will confirm that rate cuts are on the way. I tend to think that he'll probably stay clear of talking about a 50-point cut. I think he'll probably lean more towards 25 if he does go down that path of talking about magnitude. But obviously a lot riding on it. Markets have rallied in anticipation, but of course overnight we saw the US market come off a little bit because there's been so much optimism priced in again to the US money market in terms of the number of rate cuts this year. I think around 4 or so, that investors are getting a little bit worried that maybe he won't be quite as dovish as the markets come to expect. So obviously a lot riding on that. I think there's some other central bankers also through the course of Jackson Hole that will make comments, but the focus will be on Powell. And I think it comes I think it's 10 a.m. US time, so it's well into our bedtime before we'll hear from Powell. And I certainly won't be staying up, but I'll be looking at it when I get this morning.
All right, you stole my next question. Were you going to wait up? But okay, it's not a Taylor Swift concert, is it, Shane?
It's not the Olympics. It's not the Olympics.
All right, well, looking ahead to what we're focusing in on next week, the monthly CPI data. We've also got retail trade, and we've heard a lot from Michelle Bullock in the last couple of weeks too.
Well, you have, but it'd be nice to get a break from the RBA. It seems often that every second day is RBA day. You get minutes and parliamentary appearances and speeches and all this sort of stuff. Same, but virtually in most cases the same thing. But of course you get different spins on it and you have to look at it each time to see whether there is a slight difference. But the big one, of course, in the week ahead will be Wednesday's CPI numbers. They are for July. It's the monthly indicator. It will be focused on because we did get those higher numbers through the June quarter. It did dip back to 3.8% in June, monthly CPI that is. This one we expect to dip back further to 3.3%, partly because of higher numbers a year ago dropping out, but partly also because the monthly increase will probably be a decrease. In fact, prices will have fallen, and the big driver there will be electricity rebates. Obviously, $300 per household nationally, and in some states like Queensland, I think it's an extra $1,000 on top of that. So that will drag it down. Obviously, a lot of focus on the underlying indications as to what's happening there, but I think we will get some better news from these inflation numbers, and that will probably, I don't think it's going to be enough to eliminate the Reserve Bank's tightening bias, but it may dampen down fears by some that we're going to see more rate hikes.
Should we be focusing maybe less on every minutiae movement from the RBA then and more on China? Big data next week as well with industrial profits and their PMIs.
That's right. I think that the PMIs are probably the big one to watch there. The industrial profits, I think, will still be on the soft side when you look at them in level terms. This is data for July, and we know that the July activity data released a couple of weeks back were on the soft side. PMIs will give us an update on August, and the odds are they're probably going to remain on the soft side. Interestingly, for those into conspiracy theories and arguments that the Chinese government distort things, the official PMIs in recent times produced by the NBS, National Bureau of Statistics, have actually been weaker than the Caixin PMIs, which are from a private company. So I often think you've got to put the two together. I think the problem in China right now is particularly that the state-owned big companies are suffering perhaps a little bit more than the smaller companies. But whatever it is, those numbers come out next Saturday, 31st of August, and they, I suspect, will remain on the soft side.
All right, well, it's been a busy week. We're all exhausted, Shane. I imagine you are as well. What's on for the weekend for Shane Oliver that you can tell us? We obviously don't need to know your every movement.
Well, I'm hopeful the weather stays nice. I have a little boat and it was getting serviced. So hopefully it comes back today and I can use my little boat. But time will tell. It's always nice this time of year when you sort of start to come out of the winter. I can't say it's a long, cold winter in Australia. It's often a couple of months and then you're out of it again. But hopefully if the weather's good, I'll be out there in the sunshine.
Excellent. I thought you might be a surfer or something as well. But anyway, that's a story for another day. Shane, always appreciate it. And of course, we'll be listening to your podcast with Diana as well. Shane Oliver there from AMP. Let's have a quick look at what we saw as well in terms of leaders and laggards today. We mentioned Fisher and Paykel coming through with its upgrade up 12%. Judo Bank reported earlier in the week also having a good day along with Breville, Chalice Mining and IPH. To the downside today, Inghams, we mentioned they are off to a bit of a shaky full year 25 due to cost of living pressures. Spark New Zealand also reported today and the market did not like that. Whitehaven Coal we discussed in detail on the call yesterday. Fletcher Building and Insignia Financial as well after its results. In the small end of town today, Elixir Energy, LTR Pharma, Findi, Wyoming and Mayne Pharma. So very much a pharma theme there, doing very well. And to the downside in the small end of town, Big River Industrial, Brainship, Playside Studios, Grange Resources and Lindian Resources. Okay, so looking ahead to next week, well, of course, tonight we've got the Jackson Hole Symposium and Fed Chair Powell speaking, but next week it's going to be very big in terms of earnings season. I mentioned some of the companies coming through, Bendigo and Adelaide, Pilbara, BHP. We're going to be speaking to the CFO. We're going to be speaking to the Woodside Energy CEO. We'll also be speaking to a number of those other companies on your screen there, so keep it switched to ausbiz.com.au. But on the data front, as Shane alluded to, the July monthly inflation data and retail trade, and then, of course, more globally, we're getting China industrial profits. He also mentioned the fact that the China PMI is very important and the one-year MLF, along with US home prices, economic growth, and the core PCE index next Friday night. Let's have a look at where the market has finished. We couldn't quite make it 11 wins in a row. We're down a third of 1% there on the SIBO 200. Checking where the ASX 200 has finished, down just 3 points. Whew. It really did try to make it 11 in a row, didn't it? 8,023. Can't be unhappy with that. And as I mentioned, it's been a huge week here. We've been busy behind the scenes and in front of the screens, bringing you all those big name CEOs, CFOs. So please, if you did miss any of those, do head to our website. Some really fascinating conversations there, straight from the horse's mouth, ausbiz.com.au. We'll see you 9:45 a.m. Monday. Have a great weekend.